Alrighty, boys. Let's do this again. So, Fartcoin is going to the moon. Somebody dumped in $5.1 million today. You know? So that's insane. So buy Fartcoin. There's this other GigaChat went up like 18,000% over its lifetime. I don't know. Okay. Enough about Fartcoin. So I was listening to this audiobook and thinking about how easy it is to forget this is a numbers game. And this chapter was about risk management and how much you should risk on your account. And also I want to preface this by saying I'm probably not going to reduce my risk that much on evals because the account is just so small that it would take forever. But basically, our strategy is like roughly 60% if you're not being super picky and if you're not following the rules and blah, blah, blah. So this calculates, I think I linked this in one of my first videos. This calculates a losing streak that I think you're like this is like definitely the number of losses you would have in a row over the given sample size. So over 100, 99%, you're only going to have one losing trade in a row because 99 trades are winners, one is a loser. So hopefully that illustrates it. But what that means is that over 1,000 trades, if we're trading at 60% win rate, we're going to have an 80% losing streak. Okay? An 8-trade losing streak. Okay? This is essentially how much you're playing with because you can't lose more than 2,500 on the eval. Okay? And this is how much that eval is for in my funded futures. It's for a $50,000 account. So I was trading based on 1% risk of 50K. And I think that's what a ton of people do on these accounts. 1% of 50K is $500. So, but if I lose 5 times in a row, which is going to happen, over 1,000 trades. You're not going to take 1,000 trades in the eval, but just trying to illustrate that you are going to have losers. You're going to have losing streaks, and that losing streak is going to mess with your head too. Even though you have to be really firm in your system, because even if you've tested it backwards and forwards, and even when you get to the point where you've made 7 figures from trading, you'll still get hit with a losing streak. And how are you going to respond to it? You know? So this is just saying, let's say it takes me 30 trading days to pass the eval. I would have which is pretty long if you're risking aggressively, but I would have 4 losing trades in a row in there somewhere. And like 2% is the high end of risk in this recommended zone. It's like 0.5% to 2% is how much you should be risking based on. There's another thing called the Kelly criterion. This is basically like how much you should be sizing when you're betting, and where people argue about what is trading gambling, is it betting, kind of, but the point is that this is kind of like a sequential system with winning and losing rates, and that's why you should look at that. But that's where this comes from. 2% is considered aggressive. That would be $50. Let's just make this. So if we're saying it takes us 4 days, let's make this 4. So that's a $200 losing streak. That's honestly not that bad. Okay? That's if you're risking 2%. What if we want to get aggressive? That's just not enough for us. We want to risk 10%, which is crazy and not sustainable at all. Then, I definitely screwed this up. I'm wicked tired. Sorry. Then, you're losing $1,000. That's 40% of your account. That's a big chunkus of your account. So not good. But, it's not as much absolute money. Just trying to let you think about these things. So now if we're on the 50K account and we're trading for 30 trading days and we have a 4 streak loss using 2% of 50K, not 2% of 2,500. You get 2%. That's $4,000. Jesus, I'm so tired, dude. I can't. Okay, so 2%. Let's just look at this. 2%, $4,000. If I'm trading this $2,500 account like 50K with 50K type risk, and I have 4 trades in a row that lose, not a crazy amount. I'm exploded immediately. More than exploded. Okay, I think it's only going to take us three trades in a row to explode if I'm being really aggressive here. So just something to noodle on, something to use for yourself. Yeah, this is a cool calculator though. So again, I don't think I'm gonna change that much about my risk profile on the evals. And this is kind of delusional, but it's because I think we can get this down really good. I think this has the potential to be very accurate, the system, and maybe it proves not to be. And you just get to the point where you're like, am I really gonna just sit there and trade MNQ to $3,000? That's a long journey, baby. And I know this is about patience, but that could be my downfall. I think it's all psychology. It's all psychology for me. It's patience. It's tilt. Going on tilt. The first time that really just took me out of the game, the first day on this eval. I don't even know why I did it. I was feeling good. I think I came into this from the wrong perspective at that stage. Okay, so today's Friday. Happy Friday. Just looking at Thursday, because Wednesday was New Year's, Tuesday was New Year's. So just looking at yesterday and today, this was kind of not great action. It was kind of going lower. So you're at this point below the EMA, which is a rule we sometimes break. And this kind of looks like it could be a setup here with this big green candle, but honestly, you have 2 taps, you're below the EMA. I feel like you should have a really good entry if you're gonna go against the trend like that, because this kind of is just becoming a downtrend. Not a crazy one, but it is. Then you break up, and you get this supply zone. Nothing happens, and then just chop sideways. So really nothing going on yesterday. Today was interesting though, because we've seen this huge kind of wick rejection before. If you traded today right, you could have made like 4,000, 5,000 in 2 trades. We've seen this crazy wick before. I'm not going to try too hard to find it. Right here. That was technically above the EMA, but it was right there. But you had this big thing that I don't know what we call that, upside down U lowercase n, but I don't like this action. I think it just kind of screams like, I don't know, maybe all the trading that's going on up here has finished, but it does go up and test there and then come back down. So there's probably like a big volume. I don't know. But we see this wick, really nice rejection. But one thing it did break through, two thing you're kind of close to the EMA there. But the point is that wick doesn't always work. But here it did. And it worked really well. And let's talk about that in a second. First, let's do this one. This was an old zone from yesterday morning. Supplies. So really not that old. I mean, zones can be good for a little while. Not the best entry here because you close inside your counter trend. So I would say this is bad to take. I would say don't take this because close inside counter trend, not a super new. It is an untapped zone, so that's kind of, But I was thinking, and I kept myself honest here. So you see I drew this as a loss because I had my imaginary stop set up here. I'm still not actually trading, so it won't show up on my sim, but I just draw these boxes while I'm watching the market. So this wouldn't have worked out. But one thing we were thinking about earlier is like, should we be putting stops above / below candles or zones? And I think traditionally it's zones for supply and demand. That kind of follows the theory, but that also is a lot of risk. Sometimes it can be like substantially more risk, like you see on here. This candle adding this zone onto it for risk, that's a lot. So I quote unquote took 72 points, almost $1,500 of risk on this. And this is just because the market was moving like this today. Like if we covered up price and you hadn't seen it, this range could be 10 points. This range could be 100 points. It's the whole markets are fractal thing. So the reason for bringing that up is like at the end of the day, when you do get this shit down, you should be able to trade 1,500 as if it's 15 points. For one thing, like you should be psychologically sound because price action is price action. For another thing, you shouldn't be worried about the money. For another thing, sometimes that's just what the market gives you. You can't make the market run up, $2,000 in 30 minutes, 3,000, 4,000. You can't make it do that. It's just going to do what it does. Okay, so if I had my stop up here, immediate L, not immediate, but however, if we have the stop up here at the freaking zone, still a lot of risk, very scary stuff, especially because this comes that close to tapping. And this is, this is just the structure. That's where the high was. It's even up here a little bit. But if you did that, you enter on this candle, gets your second tap. And if you're watching this looks really bad. Like if you're seeing this make another high in real time, close inside the zone a second time, it's kind of sketchy. And make that wick. And this one. So I was kind of aiming for the base of this like thing right here. This is also a demand zone. So like I like to take profits, just ahead of zones in case you get a really strong bounce. Might not break through. You just don't know. 1,800, which is actually Yeah, it does. It hits more than a 1-to-1. Like slightly. Yeah, it does. So you're being chilling. 1-to-1 is 1660. So, dude. But again, you're kind of trending. You're above the EMA. I was thinking that the trend from yesterday was we opened below things yesterday, even though there was a bottom. So I'm just thinking like we could still be making a downward move. We saw it on here now. That's clearly a bottom, but then the wick. Okay. So I think the sketchiest thing about this was the supply zone. If you look at this, I mean, what's it look like here? If you look at it here, I think it's this. It's like it's action going on between. This happens at 10:20. Okay. So in here, that doesn't help at all. That doesn't make any sense. But if you were to go up to like a 20-minute time frame, this block right here would kind of, in some form, coalesce into a block that would let you draw a supply zone off of it. So that's why a demand zone. So that's why I'm kind of loosey-goosey with this. And not only that, but also because it shot off like that from this area. Kind of definitively put itself above the EMA, and you can see the EMA sloping higher and higher depending on how I scroll my mouse, but it is definitely sloping up. This 200 EMA. Then you get no close inside. That's big. You get cumulative delta. That's nice to have. You're near or above the EMA. There's not a ton of wick, certainly compared to the bottom. There's not. So I'm thinking, yeah, okay, let's draw this box out. I do the same thing. I do just below this supply zone. You're risking this, and you're definitely getting the 1-to-1 on that. Even if you risk down here, this is the sketchy one because the zone's so big. But even if you risk down here, you're getting that 1-to-1 as well. And it's almost $2,000. That's nice. 94 points is what I closed with. 94 points, $2,000. I mean, can't complain, dude. But this is just like the range of the day. This is just how it's moving during this time. Definitely slows the hell down up here. But I was like, okay, I would just put a stop loss, a take profit right there at the demand zone, supply zone. Jesus. It's kind of like interesting. Probably, I was looking at this, but I didn't really, I did draw that box, but this is a bad wick. Don't take that. It breaks above here and it turns the zone kind of into support. But like, if you do go on this, again, like, it's good to have these breaks of structure that turn into trades, like confirmations of a breakout. This would have stopped you out, I think, actually, if you were, if you're only a tick below there, it would have just got you. But if you want to come in here, it breaks this high and comes straight back down to test the high at the zone, which was also a high over here. That's what this was. That's bouncing off of where we drew the zone from. So if you want to take this whole thing as risk, because that really sucks to just get stopped out by one. That feels like normally that would kind of work. I think a lot of sellers came in here, and if you do see this candle after that candle, like it can't stay above it, that might be a bad sign. But then this candle is a better sign. But if you use the zone as a stop loss, you end up taking another fucking $1,000. So, you know, damn, dude. Couple of rough ones there. Yeah, like you get like it just catches your stop loss if you're putting it above that candle, if you're putting it right below that candle. So like, I mean, a day like today is a great case for using the zone as a stop loss. I will keep, maybe I'll just test with that going forward. I'm both risk averse and like kind of aggressive, or I guess just like gambly or whatever, and prone to tiltings, but still like consciously I'm risk averse. So I'm like, I don't want to take that much risk, but I do it anyways. So what's the point? I don't listen to my own advice. Yeah, then just weird. It just keeps making higher highs. If you ride it, you notice how the first high that it formed is a bounce right off this swing high here, which is pretty significant. If you want to ride this thing, just keep seeing how many swing highs it gets. It gets this one. It gets this one. It nabs this one. Then it falls short of this one. When you see it come back down here and it doesn't hold this last swing high, that's when you might want to call it. And if you just put your stops below the swing highs, well, that wouldn't make sense. But let's say you just wrote it up, put your stop here. Even the second swing high is $4,000 freaking dollars, dude. So, really good day for you guys if you had some balls and took those big risky trades. Not to say that being ballsy is good in trading. Sometimes that just really screws you up. I mean, if I can see you trading this action if you have like $100,000, $150,000 account. But it's just a lot of risk for a small account. Unless you go to the MNQ and you trade half size. So you trade 5 contracts on MNQ. This risk right here of the first trade that we looked at is only $214 per contract. So if you do 5, it's like $1,000. So you could do like 3. You could do 2. And you would still kind of make, it's just to like mitigate your risk, and you would still make good money. Like if you had 2 contracts and you came down here, then you're still making $400, which on MNQ is like actually insane. I mean, that's kind of just showing you how much the action was today. All right, that's it, boys. I'm freaking tired for some reason today. But it's easy to... it's just so weird about trading. Because you're like, oh, man, yeah. A freaking $4,000, $5,000 day was right there in the palm of your hands if you're trading, if you're drawing boxes like I am. But it just it does that when it wants to. These are huge swings, which is nice if it's going in your direction. But if it's not, just don't. Try not to think about the numbers. I talk about the numbers a lot, but just think about the candlesticks. Think about where your stop loss is. Think about where your take profit is. Think about what your entry is. Is your entry with the trend? Is it against the trend, but does everything else look spot on primo? Like this candle wouldn't. This is not a good trade to take against the trend. It works out if you have your stop loss up there, but just this wick right here, not good. The close inside, not good. If this looks like, I'm pointing at my screen like it's going to show up. If this action right here looked like this, then you should think about taking a short. And it might have gone further. I don't know. Shoulda, coulda, woulda. But this isn't great. This is great. This is awesome. This is what we want to see. Take a picture of this. I'm actually going to. There. Take a picture of your trades. Put them up on your wall. Make notes. Yeah. That's it, dude. Don't forget it's psychological. It's a psychological game. It's a psychology game. It's a psychology game.